The big news in gaming this week was the acquisition of FaZe Clan by Gamesquare. Both are public companies, so there is a lot of information on the deal, which I'll cover in this video. As a disclaimer, no information in this video is investment or legal advice. The terms of the deal are an exchange of 0.13091 shares of Gamesquare for each share outstanding of FaZe. Given that Gamesquare's stock price increased on the news of the deal to about $1.73, depending on the exchange rate, this would value each FaZe share at 22 to 23 US cents. Excluding other equity, the total merger consideration is about 17 million US dollars. Including other equity, the total consideration might be perhaps $2 million higher, depending on how that other equity is valued. From the perspective of Gamesquare, this looks like a favorable deal for several reasons, which the market apparently agrees with since the stock increased on the news. First, the acquisition premium was only 20 to 25% when using closing stock prices, which is below average. And this is after FaZe Clan's stock has had a steep decline. Even after factoring in losses since June, it looks like FaZe may have had over $10 million in cash at hand and not much debt. The transaction was an all-stock deal, which reduces risk for Gamesquare if Gamesquare can decrease FaZe Clan's cash burn. I would expect this deal to have significant cost synergies because there is operating overlap between Gamesquare and FaZe. This is a euphemism for layoffs of redundant employees. Gamesquare stated that it expected over $18 million in cost savings from the purchase. I also think there could be revenue synergies because of the operating overlap. Lastly, the deal appears to have tax benefits for Gamesquare. It looks like Gamesquare can offset some of its future income using the net operating losses at FaZe, which are significant. According to its last annual report, FaZe had over $120 million in federal net operating losses that could be carried forward. The value of the tax shields are significantly decreased in this situation because there are usually restrictions on the usage of operating losses and Gamesquare doesn't have positive net income. However, the tax shields could make Gamesquare itself a more attractive acquisition target, which is beneficial. So, in closing, I think this deal makes a lot of sense for both sides of the transaction if Gamesquare can lower FaZe operating expenses. Gamesquare looks like it can be a good home for FaZe, which has a strong brand in gaming. Unfortunately, this could mean cost rationalization at FaZe, which could result in talent leaving FaZe over the coming months. In the long run, I think this deal could improve the health of the overall esport and gaming industry.